Yo, what's up, guys? Welcome to the stream today. G here. How's everyone's weekend going so far? Today, just generic live stream here. We're going to be covering a lot of different stocks in the EV sector. So if you guys have any questions or you have any stock to look at that's in the sector, let me know. Some of the ones that I've got lined up, gathered a few articles, so we'll go through those together. I got Tesla, Lucid, Polestar, Ford, NIO, Rivian, just a couple different stocks that we're going to talk about. But if there's any one that I'm missing, just let me know and we can definitely take a look at that. So we'll go through some news and stuff, just give you guys some latest news on each of these companies, and then we'll also take a look at the charts and where we can go forward going into the end of the month. So we've got a few more weeks in 2022, and then what we can do for next year. And it's kind of the outlook. So if you guys found value in the video, please subscribe to the channel, hit the like button, help my channel grow. I think only like 25% of you guys are subscribed, and that would definitely help me out a lot. So pretty casual today, like I said. Just want to give you guys an update in the sector. So obviously the market hasn't been very good to the EV stocks, although like the numbers and stuff have been coming up. Like they've been growing, and 2022 was really like a good year for them in general. The stocks haven't really been showing that, and it could be that 2021 really like priced in a lot of this growth going into 2022, and so now we're kind of pulling back more into reality and stuff, right? And it is a little worrisome with all the economic changes and everything that's going to happen or projected to could happen. There's more fear in that, right? But I do think it's still a good sector, and there could be a big risk to reward ratio there, so really up to your risk tolerance. But just a little recap of what's going on in 2022 for the sector. Obviously, like I said, big year for EVs, very transformative trend. Getting there was a little bump at some times, but I think Tesla really did open the doors for a lot of different companies to start becoming or transitioning into this, right? Now, one of the main hurdles and one of the main things that has held back is like reopening. There's a lot of supply chain issues, a lot of material issues, right? So lithium ion battery shortage was a big struggle. Lithium, nickel, cobalt prices just went skyrocketing, and that's really going to affect margins and being able to actually produce these vehicles, because you guys know EVs, I mean, the biggest part, most expensive part is going to be their battery. So that's going to definitely put a cost into producing these, and then at the end of the day they want to make some sort of profit, or at least cut up a margin there. So if prices go up, then some of these manufacturers have to raise their prices, and we've seen that across the board a couple times this year. Tesla has done that multiple times. Polestar, I think Ford just recently did that. So yeah, it's kind of just unwinding, playing out how we thought it would. If the demand is still there, and it probably will be there unless we get like a recession or something. A lot of these manufacturers are still trying to transition, so there's going to be demand, and it's going to be a growing market. So really just the suppliers need to catch up to the demand and the production and stuff. But yeah, also Ukraine, they also kind of impacted the EV manufacturers throughout the year. We got banned imports, so some of the products that really were coming out, like nickel and other stuff like that really did take a step back. And so just gave, added more pressure to the higher demand as a lot of people got on board with EVs. So, yeah, exactly like I said. So to help balance some of these shortages, Tesla, some of these other companies started raising the prices of these EVs. And really just like, I guess, if the market continues to stay in the way, I mean, towards the end of this year, it could continue to stay bearish, but just depending on the outlook for batteries and demand, then some of this could definitely come down. So one other thing I wanted to mention, I guess we're going to talk about Ford in general in just a little bit. They are actually possibly going to be opening or teasing the SUV, which is going to be pretty interesting. Ford teases upcoming SUV EV, and like I said before, the market is like huge. It's probably one of the best selling markets. It's better than the sedan. It's better than the pickup trucks and stuff. And so obviously Ford is seeing potential there. And so they've already got the Mustang, which is like a hatchback, smaller SUV sort of kind of. And then they've got their pickup that, by the way, they've got bad news on that. We'll talk about that in a little bit. But obviously, like I said, they're seeing some potential here. So just teasing the idea of an SUV would be pretty cool for them, I guess. And here is the tweet from Martin Sender. Great to see so many of our media friends today in our Ford European Design Center. Can't wait for 2023 to arrive when we will pull the cover of our first electric passenger vehicle coming from Colgin. What? Okay. And yeah, there's a little sneak peek of it. So it kind of looks like one of those Ford Explorers, probably like an electric Ford Explorer or something similar. And yeah, I think that's pretty cool. But let me shift over a little bit back. I forgot to talk about some of the lithium stuff and just wanted to kind of touch bases on the battery prices. So lithium is becoming a very expensive material. And so lithium, a mineral used in batteries to produce electric vehicles, smartphones, laptops, we talked about this in one of our other streams, has surged to a record high this year as the world pushes towards this green future. So in the process of decarbonizing the global economy, battery prices have gone up and have risen on an annual basis. And so that's just one thing I want you guys to consider and think about when you're investing in EV stocks. They are paying an arm and a leg to be able to get these vehicles produced. And really, there's not going to be any downside in prices, or there couldn't be on projection basis. Not until 2024, when more lithium production is expected to come online, are prices forecast to finally drop. So the rise in lithium-ion battery packs could be the first red flags in the energy transition that prices to decarbonize economies will be costly. So I think that's pretty well known that transitioning into like a green decarbonization economy will be very expensive, and that's why they're passing a lot of bills and stuff, which is kind of bearish, and it's bad for the economy because it's more money out in the market. But yeah, I just wanted to point that out because there's a lot of companies that don't have new contracts secured, and they're gonna be finding like panicking for production and materials. So that's one thing to definitely look when you're looking at companies, like that they can start securing new contracts and getting contracts to be able to get this material so they can continue to operate. So that's one thing to definitely note. But a lot of people were asking about what's going on with Tesla. Obviously, it's been on a downtrend, and it's really like the alpha and the whole sector and stuff. So when this one goes down, a lot of the other ones kind of tend to follow and come down with it. And it's actually lost about half of its value. It was $1 trillion company, and it's now like at a $500 billion market cap, which is still super expensive. I'm not sure how much they're bringing in as revenue, but it's nowhere near 500 billion. So I do see more downside in Tesla, and we'll talk about that in the chart in just a bit. But also growing and just growing competition is going to really push some pressure into Tesla, because like we just said, Ford is coming out with new vehicles. We've got Polestar, we've got, you know, Lucid, Rivian. And so this once market that was like lucrative to Tesla and just basically Tesla alone is becoming very saturated. There's a lot more competition. And so even if people don't want to admit it, Tesla's going to lose some market share. Obviously, they're way ahead as far as like technology and stuff, but just also not to include none of the social media stuff that Elon Musk does is just going to put some pressure into the stock itself. And so, and not everyone's going to want a Tesla, especially if buying a Tesla supports Elon and some of the practices that he does where, yeah, so it's just a mess, right? So the best thing for Tesla is to, you know, remove Elon as a CEO, and that's going to relieve some pressure off the stock itself. And that could even possibly initiate a short squeeze rally. But I think for the most part, until Tesla or Elon, you know, or something along that splits a little bit. I mean, Tesla will still be owned by Elon, but he just won't be the face of it. And I think that would benefit the Tesla and the shares itself. So EV sector market as a whole faces significant hurdles as it's certain if it wants to expand. Yeah, so just talking about the materials and stuff, right? So we've talked about materials being very scarce right now, and just the production not really starting to pick up until maybe 2023, 2024. And so a lot of companies are really just panicking to get some of this stuff and meet their deliveries for 2022. So I think that's pretty interesting stuff. I don't really have much more on this. Built for a shaky foundation, Tesla. And just really touching base on how there's more competitors now, right? So competition in Europe will be fierce. NIO's trying to enter that market too. So that's a lot of pressure just being put onto Tesla, especially if some of these other competitors do kick it off really well. Some of my favorites, Polestar, obviously I like Polestar. I do like Ford too, but I don't know, they're kind of shaky right now. And then NIO, I like what they're doing, but a lot of economic just catalyst, and we'll talk about what's going on with China and everything. Just a lot going on there is really affecting the price, so I would see more downside in that as well. But why Tesla shares have been shaking this week, and like I said, been cut in half, but also Elon has been selling a lot of this stock. So I'm not saying that Elon doesn't have belief or doesn't believe in his stock, but it's really pushing down the stock, because if he's selling, then why should others be holding, right? Just this year alone, I think he sold like, I think it says here 23 billion, but it's actually more like 40 billion, like 36 billion. So that's a lot of money. And it's just, I mean, some people should realize that since Tesla's not the only person in the market now, it's going to become harder to give that valuation to this, right? So now that we have Ford, we have, GM, we have Mercedes and some of these others that are starting to pick up some of the market share. And I think I've talked about market share in some of these other live streams where Tesla's market share has been coming down this year more specifically. And now you can't really add that lucrative value to the PE or to the forward guidance and stuff. Although their growth is really amazing and stuff, just the way the chart played out, it's just so overvalued, right? So right now 474 billion. And also, like, one sneaky thing by Elon that I don't like or approve is he would really try to mess around with the price, because psychologically, if it got to like, I don't exactly remember the numbers, but it got to a certain level where it was like very expensive for people to buy, right? So people within the US can buy partial fractional shares and stuff, but people outside the US can't, so they can't participate. So like a sneaky way that Elon basically just like doubled his net worth and stuff was by doing these share splits, right? And so when it got to 900, they would do like a, what was it, like a 4-to-1 split, and then it would come down, and then basically in the back end, everybody's getting more wealth, but the company's not like doing that as far as like fundamentally. So that's why it got so inflated. Like, it's $300 a share, but this actually is like, wouldn't it be like $9,000 or something at this point? I think they did. We'll have to look at the spreads or the share splits. Let me look that up actually really quick, because they've done, I think, 2 shares, Tesla shares, Tesla stock share, stock split. I think they've done 2. They just did the 3-for-1. So the stock really was at $900, but before that it was, let's just do the split history. We'll get a better idea here. So where is it? So 2020 they did a 5-for-1, and then they did a 3-for-1. So really, if we do the reverse engineering here, 1 Tesla bought would be equal to 15. Does that make sense? So right now you would be trading at 1500. So it would be 900. Let me see, is this right? Well, right now it's a lot less, it's 150, but back when it was 300 and they did the split, it was basically at 900, and then when you did 900 times 5, it was at 4,500. So you're basically paying, now it's basically 4,500 divided by 2. So now it's trading at 2,200. So it's still insane. If you guys look at the chart on this one, it's not even nowhere near the 2020 prices, which is just ridiculous. So there is going to be a lot more downside, and like I was saying, it was just a way for Elon to like multiply his net worth, be able to get more leverage. And when you have leverage and you have equity and stuff, you can take out loans. You can basically some of the stuff that like even what's his name, Bank Friedman, he didn't really have any money. He was just using other people's money. He was leveraging that, and he was taking out loans and other stuff like that. So that's, I'm not saying Tesla's a scam or anything. I'm just going off on a tangent here, but that's how Elon got so confident in himself, and that was going to be a downfall, and it's starting to show, right? Because now he has to put up like 44 billion for a Twitter acquisition, which is like insanely overvalued. And the people that are going to be suffering are going to be the Tesla shareholders, because like I just showed you guys, he's been doing a $40 billion sell-off this year. So 23 billion here, and I think there was like 13 billion somewhere else that he was doing. So what are your thoughts on this? I'm going off on a tangent, but I do think the stock for Tesla has more to go, but we are at a significant level. So maybe we should hop into the charts and then we'll get back into articles. Or do you guys want to do, yeah, let's do that. So Tesla, like I said, is going to be the forefront of the EV sector. There's an ETF you can kind of also follow too. It's Drive, it's Global Autonomous, and this is going to cover some of the autonomous and electric vehicles. It's like an ETF you can follow too. But since we're talking about Tesla, we're going to stick with Tesla here. And I was going to say, yeah, it's been in a downfall. We've talked about the head and shoulders pattern that we've had here, right? And so the end for this head and shoulders pattern is the distance from here to here. So you can clearly see we've got more downside. I'm thinking probably, I mean, if I do this more accurately, we would talk about somewhere here to maybe like, this is just eyeballing it here, but it would be somewhere around maybe $40. Let's just say 50. Okay, so we're definitely expecting maybe $50 to $65. And you can also pick up on this gap down here. There's like gaps down here that haven't been filled. So definitely an opportunity or a possibility that this comes down, right? And like I was showing you guys earlier, we're not even nowhere near the 2020 numbers. So this thing was, it was like trading at $23. It was like 200 or 300 back in the day. Then it squeezed. It did like a short squeeze up to like, wasn't it like 900 or something? And that was 2020, so $60. So there's still a lot to come down, and so that's what a little bit panic is happening. But I will say short term, I think we are at a short term bottom. I think 150, this range here, which we talked about maybe in a few other streams, this is a pretty good area of consolidation that we had. So it's not going to be an easy break from 150, especially about 130. If it breaks these levels down here, then, you know, more panic will start to come in, but I think it possibly does a consolidation here. And yeah, but yeah, the head and shoulders is definitely there. And this is a pretty good significant short-term bounce that we could have, maybe a retouch back to 180 and stuff. But yeah, I do have some more articles I want to go over, but that's gonna basically cover the general market and then also cover Tesla and a little bit of Ford. I have more articles on Ford. What's up, BB? Where do we see Polestar? How far down do we think we can go? I do have some articles in Polestar, so we'll talk about that. I guess we can talk about that now. Really quick, let me just show you guys one other thing on Ford that I wanted to talk about. Like I said earlier, they just started doing their price hikes for the F-150. And so this is kind of eye-opening, because like it kind of goes back to the materials and things just picking up as far as being able to get these materials. People have to raise up the prices so they can still get a somewhat of a margin, right? So now the F-150 starts at 56,000. It's still going to be cheaper than like a Rivian and stuff, but this is going to probably cut down on actual sales and stuff. So this is actually negative news, basically. And earlier this week, Ford's Lightning was named Truck of the Year, and stake a lot on the F-150, believing Iconic's widespread popularity will transfer to his new model. So that doesn't really help much, right? But it hasn't been easy for Ford. They're taking market, but they are also spending a lot of money to get a lot of this material and stuff. So they have to raise some of these prices. And if the recession hits or something like that, then demand will probably cut down on some of the sales. So road ahead for Ford, questionable future, because even though it's a lot cheaper than the Rivian, prices rise more, then that gap will get very, very close to closing. So basically what they're saying is, if prices continue to rise as far as like the F-150, then Rivian becomes more of an attractive truck. And so that's one thing that they need to keep in mind when they're doing that. That said, some truck buyers may be more inclined to trust a legacy automaker than a new age startup. And that's very true. I think a lot of people, and that's one thing that's a little more reassuring with Ford than Rivian. There's proven, they've proven themselves for since, like what's 1960 or something, since Ford's been around, and or isn't it like Henry Ford 1950 or something? They've basically they've done it. So they've got legacy experience, they've got existing revenues, and so yeah, there's a little more sanity with that, but just the price rising, and it definitely gives some relieve some pressure on Rivian. But they've got their own trouble and stuff, so we'll talk about Polestar in a little bit because I do have some Rivian stuff. But yeah, Rivian has their own struggles ahead as well, because basically what happened with them is they paused, and this is actually good. They paused their partnership with Mercedes-Benz on the electric van. And so that's just going to bring them back to more of a core, refocus on what actually matters, and that's going to be like the pickup trucks, because they were doing way too much, right? And in this type of environment where you got different models you're working on a lot, that's one thing I don't like about Polestar right now, is they've got so much on their plate. I think they need to focus on like smaller steps, and that seems to be good. That's what Rivian's, trying to go back to, and I think that's a very good thing. And so that would be one thing that I'd be concerned for Polestar, just to add that, because I know we got Polestar viewers in here and stuff, and I was trying to be as real as I can. But yeah, let me answer some questions real quick, or should I really quickly run through this? I guess you guys get the idea. Basically, they had plans with Mercedes to get like the Amazon vans and stuff like that done, and now they're putting that on pause and going back to their core business, which is great because now they can focus on what they actually need to get done. And yeah, so I think some other companies should pick up on this, although they have a lot to get done, because they have a lot of competition. But let me talk about Polestar, because you guys, what are my thoughts on dollar cost averaging into Tesla or Apple? That has the same stocks in its portfolio, which would be the best route for long term. So I don't really like Apple or Tesla at these prices, just because I'm not exactly sure what your goal is. Like, are you trying to? I think there's gonna be a pullback. I don't know if you follow some of the market stuff, but there's a lot of fear in recession and stuff. So I think cash is like the best way. You could definitely average, but the thing with some of these stocks like Tesla and Apple is they haven't gone back to these levels where 2020, like some companies, like let's say Amazon, I think is better. It's a good example. They're getting closer to their 2020 valuations, I think, wasn't it? Their 2020 valuations are like right here. So Amazon's still expensive, but I would buy Amazon before I buy Apple, or just because. Yeah, I would buy Amazon or Google or something like this that has fallen more since the highs. See, this is trading back at 2019 levels, so I would be more inclined to buy an Amazon or a Google or Meta or some of these other companies that have fallen a lot more versus like Tesla or Apple, because I'll show you guys the chart in just a second. But yeah, so Google's falling back to 2020 prices. Some of these are still overvalued, and they can come back down to like maybe 75 and stuff if like a crash comes. But just like what I was showing you guys with Tesla, like this one is so far from their 2021 levels. Like the 2020 levels are down here. It's like another 60% drop, right? Apple, I don't like Apple. Some of the like really good growth numbers that were making it such a good growth story was like the Apple Store and stuff. They're getting like regulations or stuff that's coming out for them, and so this one's still trading way above. Supposedly this one's like the safe haven, but this one could definitely fall a lot more than some of the others, I think, in my opinion. So I don't really know if I answered that question, Tesla or Apple compared to. There'll definitely be less risk with the ETFs though, right? Because they've got exposure in others. I don't really follow many ETFs. I just follow the SPY and the QQQ. So I don't really have an ETF portfolio like QQQ or anything like that, where that tracks all these different ETFs, which would be the best route for long-term growth. I think I would personally wait. Like right now, I would personally wait, try to keep cash and stuff. I don't really know your situation though, so. Thank you, King. Yeah, if I had like tons of cash, I could dab into some of these stocks, but I would definitely try to stay cash heavy just in case there's like a big crash or something. So let me talk about spot really quick. Basically, economy started falling apart, in quote, when the invasion came or whatever from Russia and stuff. But it's really been inflation like at record highs and stuff, and then we fell off. Like we got some really bad data, some bad data here, and then what happened after we had bad data? Here's a good example. We had like really bad data here. Powell was like very hawkish and stuff, and we rallied off that. So we're trading like back around these now. Not anymore because we fell like maybe like 20 points in 3 days, but just like early last week we were back in like 400 range. If you look back at the market, we're like back in like early April price range, right? So it's like the market hadn't really like taken effect into, it hadn't really like reflected all the bad things going on in the economy, like inflation, sticky inflation, bad CPI, like like inflation's like 7%, like in the front end, but really in the back end it's a lot higher. But the media is gonna cook it a little bit. Some of the chefs they cook that up. So I think the market's like in trouble right now, and if I had cash, I would probably just keep cash, or I would try to day trade. If you want to make money, I would day trade, but that's risky, right? Because then you can lose it. So I would keep cash. I've been trading in the market a little longer, so I'm willing to lose some money. I haven't really added positions just yet, so I would just keep cash and stuff. If you want to buy stocks, I would look at value stocks. I know those are kind of expensive and stuff, but they'd be like more like crafts and Coca-Cola and stuff, things that people need to eat, like consumer. Where's my ETFs and stuff? You could do like utilities or healthcare, like yeah, healthcare or something like that. That's what's up, bro. Hopefully. But yeah, I don't know. I'm just kind of nervous for the market and stuff. Like a lot of stuff's been coming out, and it's just been scary, to be honest. What's the? I was trying to find consumer discretionary. So yeah, consumer discretionary has been taking a hit. But I would buy like, I don't know. I would buy dividend stocks. I think a dividend stock would be good. And I don't know. I don't honestly know too many dividend stocks. The main thing that I started buying was Crotera. This is the only thing that I bought was Crotera Energy, just because it's natural gas and it's going to be a pretty bad winter. And then there's like winter storms coming up, and like I don't know, that's what they're saying. So it's going to get nasty. So I bought natural gas because Europe basically has cut off their natural gas. They're in like recession talks and stuff, and the U.S. is basically exporting natural gas, so that's cutting our supply, and then demand's gonna go higher. So this one I think is out of Philadelphia, I think, or Pittsburgh, I'm not sure. But yeah, let me answer the question for BB Polestar. If you were watching our last stream, we were basically short-term bearish, and I think we can continue to go down just because we've broke this trend here, which we talked about last time. We've got this ascending trend, or this ascending trend here and this downtrend, and we were talking about this area here, and once we broke it, you can see the velocity picked up and stuff. And I did mention like $5 would be an area where it can kind of consolidate for a bit, and then we'll probably fill the gap. But I do think like at this point we're gonna most likely come to 460. So I haven't added any shares. I've just been keeping cash for this one. And also I noticed that, I think I talked about this in the last live stream for Polestar, but this looks like a this looks like a Head and Shoulders also. I mean, I could have, so the thing with Polestar, like I pretty much knew this was going to come down, but I like the stock that I didn't get any puts or anything, because I don't want to short stuff that I like long term. So yeah, we have a Head and Shoulders here. And so if this is actually a Head and Shoulders, we could come down to like $3, I think. And that's just based off of like the reset, like the reaction or the breakout. It would be like 280, maybe $3 if that's actually like a Head and Shoulders and stuff. But I think we're for sure we'll most likely come down at 460. So I've just been patient. I mean, I watch the chart every day, just on my setup and stuff, but I'm not eager to get in any more positions and stuff, right? So just like a recap, we had a consolidation phase here. So we consolidated and then we finally broke out. And we were following this trend here, and then once we broke it, we started selling off, started building a new form, like a new support, but we broke it, and so now it's low-key bearish. And the thing that's bearish right now is we have a gap right here, so there's like no support right here, like recent support. Obviously we have support back here, but no recent support, so I think we're gonna go ahead and fill that gap. So that's what I think, and that's basically what we talked about last stream. Let's look at the longer term. Yeah, I think that's basically, yeah, we're working our way into like 460. I think that could be a short-term bottom, but I would just wait, honestly. Yeah, we have like a big range right here, so I would look for areas of consolidation. Like when you do consolidation, you're like due for a breakout to the upside, or you could go to the downside, come down. So yeah, once you consolidate for a while, then you break out. So we consolidated right here a little bit, like for 5 days, and then you broke out. So right now is not the time to add. I don't think personally. I would wait. What do you think though? But that's what's up. That's what's up. Yeah, so short term, I think people don't want me to tell them, but I'm gonna tell them what I see, right? And it might not come true. So it could this could be the bottom, and this could be like a bear trap where maybe people are like confident in that gap fill and it doesn't fill, right? So it does the opposite, the market does. But I just see two red flags. I see the head and shoulders, right? And I also see the gap fill. So I'm staying bearish. Although if you look at the MACD, it looks like it wants to cross over and possibly have short-term bullish up, but bearish. So the trend is bearish, momentum is bearish, but it is consolidating right there. So like I said, we could hold $5 for a day or two and then make a move back up to like 530, 540, or just go ahead and finally break down now. So it's like a 40-cent range from here, honestly. It looks like either we're gonna go down to 460 or 540, 550. It's like a half a dollar increment at this point, but it looks like it's consolidating for a day or two. So what you guys think? I have 6,200 shares in Polestar, but it's down 40% right now. So I would think you're like where 40%, you're probably around $7. Probably a little under 9 or maybe $8. You're in like around $8. So yeah, I would wait if you're gonna add any more shares for your. That's the thing that's really like really changed the market, is just how hawkish Powell has been with a lot of this stuff. And so like I showed you guys, the demand is there, but for how long? You know, like if recession becomes a thing, some of the higher, more expensive things definitely take a hit. And that's why like I was making that Lucid video. Like I'm not gonna touch Lucid for a while, because the difference between Polestar and Lucid is Lucid doesn't have those numbers to kind of back up some of, you know, those valuations and stuff, versus like Polestar. I think that I have more trust in Polestar. I have more trust in like Ford maybe. But yeah, Lucid I'm staying away. Rivian don't really care too much. I would rather buy Ford than Rivian, but yeah, it's really just a waiting for me personally. Waiting, like for me, luckily, like when we were coming down, I averaged some stuff. I didn't get the bottom, but I started buying some stuff, and then I've basically made my money back. And then any shares that I have, they're basically free. So that's the thing that I guess that's why I'm not too stressed on it, because like I'll day trade and then I'll do side hustles, and then I've basically made my investment free on Polestar. So I guess that's one thing for me, but I do want to get back in this no cap. I just want to wait. So if I want to add more and stuff, I can add to my shares, and then I will be putting more money up. But at that point, my investment is free now, and then I just can add more shares and get more of a position if I want. Because the market does look fearful, but then there's also the chance where like this was maybe a short-term bottom for a December rally, or beginning of the year rally or something. Yeah, let me get into the next stuff that I wanted to talk about. Is it this one? No, that's not this. Rivian, why Rivian's is dumping. We talked about that. I do wanted to kind of transition from Rivian into Lucid and stuff and talk a little bit about them. They've got some definitely some headwinds ahead, but they're also taking some competition from Rivian. So one of the things that Rivian and Lucid are battling over and is really that direct to consumer sell. So really, like, it's gonna hurt like Carvana, it's gonna hurt CarMax and stuff, because just like Tesla, these guys are selling direct to consumer, so there's no third man. And then basically what happens is it's gonna cut down on some costs. So there's no salesman, there's no like commission or anything like that. And yeah, that's the experience that most people want nowadays, right? Because usually if you go to a dealership, you're paying like above market, first of all, so that the salesman can get their cut and stuff. But with direct to consumer, there's a little bit less wiggle room, but you're not getting like scammed. You're basically getting it how at the market value. But talking about Lucid, this is what I wanted to show you guys. Talking about batteries, I guess batteries is the theme for the video today. And I talked about this in our last Lucid video. Lucid has gotten basically a deal with Panasonic. This is interesting because this is Tesla's main battery supplier. So this is definitely going to cut down on some supply for Tesla. It could, but also this is going to help them with some of their numbers and stuff, because they've been struggling with the 7,000 number deliveries. So this could be one of the reasons that they've been beat down pretty badly, but now that they secure a contract with them, then they might be able to get some of those numbers. I'm still going to stay away from it, but it's good to see that they are pivoting and trying to fix some of the bad management that they've been doing. What do you guys think? Thanks for the info. Good job, my friend, and no problem. I'm just giving my thoughts. This is not financial advice. So definitely just look at stuff and look at how the market's going and the economy and stuff. And things like China and stuff. Like, there's a lot of like headwinds in China, and a lot of people are asking about NIO as well. So I like NIO as far as like numbers and stuff, but I can't invest in it because it's a China stock, and with investing in China, it comes with a lot of risks, because it's not like Polestar is like one of people want to call it China, but it's actually a Sweden company, and it's part of like a Volvo parent. But the thing with Polestar is they have manufacturing out in China, so that's why China affects Polestar in the share price, because if China locks down or does anything like that, then it reflects on Polestar. So it basically behaves like NIO, but it's not a China stock. So if I was going to invest in some NIO or Polestar, I would invest in Polestar. Right. If this wasn't China related, I'd do like what they're doing, right? They started doing European markets and like subscription and models and stuff. But just the thing that's bringing down NIO is they started reopening, but now it looks like they might not do the reopening till like mid 2023, which is going to add more pressure. And I guess it could add pressure to Polestar as well. But there is some talk of like actually getting the South Carolina production going. So that's one thing that looks good for Polestar. And yes, as a start of November or December, NIO appeared to be on the verge of getting out of its extended slump. And it did have that pop, right? Because there's like China easing, there's like no more restrictions and stuff. But it looks like things might not cool off until, first of all, Fed Powell himself, interest rates. That doesn't go well for growth stocks, right? Because they're basically paying more for any money that they owe. Like, the higher the interest rates, the more the companies are having to pay for debt, the less debt that they want to take out, right? Because if they want to take out new debt, then they're going to be taking it at a higher interest rate. So that's why you don't want to fight the Fed. You don't want to really look at high growth stocks when the Powell and he has his hammer out, because it's going to really hit a lot of the high growth stocks, right? So until there's like a sign of like a pivot or easing or starting to cut the interest rates, high growth stocks really do underperform. So that was like, I guess, going back to one of the branding questions about buying Tesla or Apple. I would kind of wait a little bit. Although Apple has like just tons of cash on their balance sheet, but it's just like at the price that it's trading at. Even though it's a solid company, it's like so overvalued, right? But we talked about NIO and stuff and how we did get like a huge breakout, and I think the same thing happened with XPEV. But let's take a look at some of the numbers and stuff. So on top of the zero COVID stuff, they did pretty well. They did 30%, 30.3%, 14,000 deliveries during the November month. And then that's like a 41% from last month's figure. So they did really good, but there's going to be other tailwinds, like I said. And that's possibly just waiting until 2023, right? So factors that may be pulling demand towards the closing months of this year, resulting in a softening demand. And that's just basically there's going to be expiring EV tax incentives, and then also a possibility of, closing back down. So not the only concern with NIO, the end of China's may fail to spark a China's economic rebound and by extension a further reacceleration of companies' future growth. So there's like the number where I saw, but yeah, a reopening for China might not take shape until at least mid-2023. So just imagine NIO being locked down for like half a year. That's gonna basically affect like production shifts, and I guess that could also impact Polestar, right? But it's definitely gonna impact NIO. It's gonna impact XPEV, Li Auto, a lot of these EVs that are out of China. So that's one like big bearish sentiment catalyst. It's possible that the market starts looking at NIO with more of a critical eye to keep it, just keep tabs on what's going on with their numbers, their sales growths, and latest delivery numbers, right? To get an idea of how the economy really is performing. Because there's a lot of shadiness in China. Like they keep things down, they keep things locked down. So you don't really know. There's a lot of uncertainty of what's going on over there, right? But they do have that European exposure now. It is a little risky, but they're trying to expand into Europe, and I would say that's a good thing also. But at the same time, if you look at Europe's economy, it's like falling apart too. So just fearful market right now, I would say. Put it simply, it's clear that the story has not changed enough to justify a move higher. The market's making the right call with NIO stock. Following their lead is the best move. Yeah, so basically, like Tesla, NIO is like the head of China. I will say that just going back to China, let me start with the China ETF, or the Hong Kong. This one? It's not this one, is it? Yeah, it's this one. So like on a time frame, it looks like we were flagging, breaking back out, and now we're like consolidating here, and we could continue to go up. If we get good news over the weekend for China and stuff. I haven't done any research for China, but I just think this is a very strong support level for China, like, or the HK50, the Hong Kong, just any Asian markets. So I don't know if we, it's gonna be a struggle to get underneath this level, right? So it's not like it's gonna just collapse like over a day or something. I think this is a good level for the Asian market, so it could definitely trend up if we get some positive news. So just wanted to point that out. I mean, you got bullish momentum. There's a possibility of MACD crossover. So I would watch just like this trend here, this purple trend here. But basically the downtrend was right here, and it looks like we're breaking above, right? We touched it, pulled back, and then broke out. So I do see some upside for China possibly. We just can't get any bad news. And so let me just shift over to NIO now, since we're talking about NIO. This is what we were talking about a few weeks ago, or was it a week ago or something? We were consolidating around this area, which I can probably show you guys in the 1 hour. That's going to be around here. We were consolidating, right? Oops. We're consolidating here, and then once we broke out of this trend, and now we're breaking back underneath. So we kind of talked about how this could break either way. Like the pennants usually break either in one direction. It's not like 100%, right? But we had a pennant there. We had a pennant somewhere around here, right? So now we started breaking underneath it, and it just couldn't get back underneath there. So it does look bearish. At this point, I think we might fill the gap, which is going to be about $11, like $10.90. Let me just remove some of these. So you guys can see definitely that there's a gap right here from 1088 up to 1140, about 1140. So similar with Polestar, it looks like we could come back down to lower part of this gap, maybe consolidate a bit, and then just either fill this gap or have a false bull trap or a bear trap down here where we think it's pretty easily that we'll fill the gap and then it goes the other way. I know that's pretty much not what you guys want to hear, but that's usually how some of the market plays out. So right now I am going to be bearish for NIO just because of the trend that we broke. And you could even do, even if it's not a pennant, you could do the ascending triangle, and it just got underneath there, and it's basically bearish right now. So that's going to be similar with XPEV. Yeah, XPEV, we talked about the trend here. It hasn't actually broken down, which is kind of surprising. And this one looks a lot stronger, actually. So if you look at it, it hasn't broke back underneath. It's got the gap down here, but it's been holding its $10 range pretty well. So this might be an interesting one to look for sure. Let's look at some of the trends on it and see what it's looking like. On the 1 hour and then the daily. So this is what I'll be looking for here. It looks like it's still supporting its ascending trend. It might be time to get the puts. If it gets underneath this, then yeah, it's going to come down at about 860, maybe, yeah, let's just say 9 to be safe. So this one might be interesting, actually. This one is, I guess, lagging NIO. So NIO already technically broke down. This one's holding a lot better than NIO. But this might be a good opportunity to short, not short, but maybe get puts. So I want to wrap up the video with some of the other stuff. My thing's messed up. Yeah, so one thing I wanted to point out from this article is the EV faces significant capital expenditures to develop its new businesses. And just going back to NIO and stuff, basically this is their consistent growth. You can see towards the end of the year, their numbers do go up, right? So I could expect some higher numbers for December. The thing is that's like really throwing this off is 2022 was just so volatile as far as like deliveries because of the shutdown. So you can see previous years really very consistent numbers, right? And then this year very volatile where you go up and down. You don't really know what to expect. And so that's the only concern with going into December deliveries, because you don't know what's going on under China's hood, basically, right? So the chart shows consistent growth in EVs since 2018. Expects to deliver 43, 48 vehicles. So the stock significant fall this year looks unjustified. But you guys got to remember about the lockdowns and stuff, right? So that's going to throw like a wrench into the numbers, and you don't really know. So I would look at those numbers and just go based off that. You can get an idea of what's to come as far as like next year. So, but yeah, I was going to just double down on these growths in Europe. In addition to the China market, they're expanding their footprints in European, and they've also got a Norwegian market in September 2021. So it does look good for the European market, just excluding any of the other news that I mentioned about Europe just basically crumbling, but they're doing some more expansion, right? I'm going to pivot back over to Polestar because I do have Polestar news, so I haven't talked about this. We talked about the chart earlier, but I wanted to talk about some of the stuff that's coming up for them. It's called basically Smart Eyes Driver Monitoring System. Now this is kind of boring, I'm not going to lie, but I'm going to show you guys a tweet. It came out on, was it right here? This will show you guys what they're talking about. Basically, it's Viva Las Vegas together with Smart Eye AB will demo the Polestar 3's driving monitoring system at CES 2023. It's going to help avoid accidents by tracking the driver's head eye movements. We'll see you there. So if I got this correctly, it basically does this. It just uses sensors and stuff, so the system carefully monitors the driver's head, neck, and eyelids movements to see if they're paying attention to the road. And if the system senses that there's something distracted, drowsy, or disconnected, it's going to display warning messages, sounds, or even the vehicle, stop the vehicle via emergency stop function if the 2 steps fail to get the driver's attention. So it's like basically 3 layers of safety. And the reason this is not like big news and stuff. It's gonna come standard with the SUV and stuff, but this could definitely keep Polestar in the running for like safety ratings and stuff. And usually when you have safety vehicles, that's something that people want to buy because they get insurance credits or like cut savings on their insurance and stuff. So people usually want to buy a safety vehicle or a safer vehicle. And so I thought that, I mean, it's not like groundbreaking stocks changing news, but it's definitely going to be cool to see this be debut next year, early 2023, I believe. Consumer Electronics Show in Las Vegas, January. So that was just one thing. And I mean, it's kind of interesting. It's nothing like groundbreaking. Technology addresses some of these main reasons behind fatal accidents and can help save lives by prompting the driver to refocus on the road. And it's an initiative to preventive action when they don't or can't. So I don't know what you guys think about that. I think that was pretty cool. It's not like groundbreaking and stuff, but at the very least, it should do some stuff. And then I guess we're back to the start. So then this is just talking about the stock split. So we did cover Polestar. I'm just gonna take a look at it once more, and then if you guys have any other questions, I'll take a look at those. But okay, so just running a good breakdown of Polestar on the daily time frame. Bearish on the MACD, bearish momentum on the momentum indicator here, and then like we said, we did break this trend here, which now we are bearish, still underneath our last bearish. So really, just going back to this support level here, I think 550 was a very big level for us because we had hopes of possibly doing a cup and handle, which as long as we stayed above 550, I think we could reverse our way back and do a cup and handle, or at the very least do an inverse head and shoulders. But now that we broke through this level, that pattern is basically void. We don't see that pattern. So that's why I was saying that at the very least we probably retouch 460. But from here it's really a 40-cent move to the upside or to the downside. And then yeah, just a lot of work. There's a lot of bad sentiment in the market with the SPY, Tesla, Elon selling like $36 billion this year in Tesla shares. And so I was just gonna recap with this drive ETF, and basically this is gonna track like autonomous driving, electric vehicles. And so if you look at this, we already broke trend here, and if you look at the pattern, it kind of low-key looks like a head and shoulders as well. So a head and shoulders pattern is gonna be a shoulder, a head, and then maybe another shoulder. And so we broke through that as well. And so I'm thinking the downside for that is this distance here. And so I'm thinking around maybe $20 is going to be short-term bottom for this ETF. And since I was saying this is a good way to track some of the EVs and stuff, I would be expecting more downside. But just going back to Tesla, I do see it at a critical support, which is 150 psychologically. So there's definitely hope with the EV sector. But I would not be surprised if Tesla does continue to go down to the bottom range of this range here. Yeah, to the bottom side. So it'd be like maybe like 130 or 132 around here. So when we talked about the consolidation here, which is going to be good support for it, but that doesn't mean it's going to stay at the top end of the support. It could definitely dig its way, drill its way into like 135, 130. So I think that's about all I have for today's video. I had some good questions here, so I appreciate everybody tuning in. Did we cover SPY and everything? SPY also had the head and shoulders pattern up here, so this is like a head and shoulders here, right? And you can see it better on like a daily chart. So let me go back there. So basically head and shoulders. So there's definitely hope that the distance or the downtrend is done, but usually a head and shoulder is basically the indication of a trend reversal. So we've been in an uptrend, we get the head and shoulders pattern here, so now we're going to be in a downtrend. And if you guys actually go back, and I'm going to cover this in another live stream, but if you go back to like the weekly, it's been basically pretty straightforward. I know it doesn't look day to day straightforward, but we've been in a downtrend since, you know, end of December, and we've been in an uptrend all of 2020, 2021. So the trend is definitely to the downside now, and we've got 4 different points of contact here. So we would probably be expecting a downtrend here, maybe down to like 300, 330, at least 330 because of this recent support that we have around here. So I'm definitely going to cover more of that in another live stream, and we'll go over any other tickers that you guys are interested in. But I think in short term, I am going to be a little bit bearish, and we'll go from there. So I know it's not going to be the best video for everybody, but just try to keep some cash heavy. If there's any economic collapse, I'm not saying it's going to happen on Monday, but just be vigilant and do your due diligence on all your stocks and stuff. And I think we did a pretty good live stream, so I appreciate everybody that tuned in, and I hope you guys enjoyed the video. I hope to see you guys in the next live stream. Please support the channel with the like, and if you guys want to check out the next live stream, make sure you hit the notification bell. I do have all my links in the description for TradingView, unusual whales, and all that definitely helps out my channel as well. So shout out to BB, thank you King, Hear the King, for showing up to the stream, and shout out to Brandon. I've been seeing you a lot more regularly, so appreciate you coming into the live streams daily. And you guys have a great weekend. I'll see you guys in the next live stream. I'm signing out. Peace.